Hi everyone, I'm Tiago and here's your May 25 update, just under 3 minutes. So we're seeing familiar trends getting stronger, with investors focusing more on growth, popular payoffs, and downside protection. So let's have a look. First, Canada, the market is still very strong. Compared with last year, it's still up 18% so far, with structured notes up close to 28%, while GICs 9.5%. May was clearly just a stable month, while GICs went up 10%. Usually there is a cycle on the GICs. And of course, the two more popular structures, which explains these two different sectors, the cap protected participation, so protected products making one third, and the auto call Phoenix, which also sold one third. So this shows how investors are looking for upside as well with some protection. Now, in the US, total issuance this year is higher, 7.5% compared with the same period last year. May was a weak month, although in the last 2 weeks of May, investors got much more confidence, and we saw a big jump in the last 2 weeks, especially in growth notes linked to equities that make up to almost half of the US market. Berry structure is still the most popular. Um, in Europe, the picture is quite different. May was a very weak month, and overall activity this year is down 16%. There is still some bright spots. France, which is just slightly above compared with last year, and the Nordics, which also is gaining ground from a very low basis. Now, something to highlight is, of course, growth notes. I've already mentioned a couple of times. So we did an analysis in the last 18 months. 85% of these growth notes actually paid well above their investments. Returns average between 4% annualized yield up to 18%. And from all of them, only 4% had losses. The majority of losses were notes issued with some single stocks or worst of stocks issued in 2022. So right now, in terms of live products, they are performing extremely well, trading well above. Most of them are 13% above their initial level. And of course, the S&P 500 now being at a all-time high is definitely helping. Now, one big headline for May was the BCE, so the Bell Canadian company, who cut their dividend in more than half. This is a big problem for structured products, especially linked to decrement indices. This is indices that subtract the fixed yield from the stock return. But now that the BCE real dividend is much lower, the deduction looks much higher, and that hurts return. So it's a reminder, single stock decrement indices can carry risk, especially if dividend forecast changes suddenly. Now, looking ahead, I'm quite optimistic. Market's quite strong. Interest rates are coming down. Volatility is under control. That means we will see much rollover activity. So a lot of protocols, issuer calls being called early and being reinvested, especially because they will provide good returns. But I think that we'll see an increase on short-term growth notes because they seem interesting, especially with volatilities in the short term being quite high. So thanks for watching, and if you're a subscriber, check the SPI data for full details. See you next month.